Passions were also running high, with many unhappy about having to agree to more cuts. After hours of debate, the measures finally passed, but not before this stark warning from the Greek finance minister, Evangelos Venizelos. Everyone must realise, he said, that the dilemma is whether we'll save the country with great sacrifices or if instead we'll march towards catastrophe. To get another bailout from the Eurozone worth €130 billion, the Greek parliament was told it had to pass another austerity package containing €3.3 billion worth of cuts to public sector jobs, pensions and the minimum wage. Greece needs money before March the 20th to meet debt repayments of €14.5 billion, or it'll go bankrupt. But Greece is already in recession, with no recovery in sight, and no sign either that many Greeks support this strategy to keep the country afloat and in the Eurozone. Daniel Griffiths, BBC News.
Let's get some more now on the events in Greece. Foivos Simonidis was at those protests last night in the centre of Athens. He joins me now via Skype. Thanks very much for joining us. A lot of violence. Who was behind it, do you think?
It's basically common understanding that these are para-governmental forces that just aim to disrupt peaceful protests.
What evidence do you have for that?
Well, the evidence is it's based on facts. I'm not going to go into rumors saying that the police are behind it or anyone's behind it. I mean, the fact is that there's a very small group of people, a fraction of the protesters that have managed to grab everyone's attention. The Prime Minister keeps calling for calm. Everyone is calm. You know, the only people that are not calm are the politicians and the group of 50 people or so that are causing these things.
And yet those images obviously have gone round the world and they suggest that people will not support any further cuts. Is that what you believe?
Well, to be honest, the people will not support any further cuts because they haven't been given any signs that their governments and their parliaments are able to, make correct decisions. For example, you mentioned the minimum wage. How is the public purse alleviated by lowering the minimum wage? That's a private sector matter. It has nothing to do with the government.
Can I just ask you specifically, sorry to interrupt, can I just ask you specifically, how have the cuts affected you and your family?
Well, they've affected everyone. Liquidity, everyone is spending basically their money trying to keep up with the new taxation, trying to keep up with the VAT on the extra VAT that's been put on the bills. There's so many special measures being brought in that everyone's salary is just going to pay for tax. Basically, there's no disposable income. There's nothing to keep the economy afloat.
Do you think now that Greece should stay in the euro? I mean, do you want it to leave? Do you want national currency back?
No, absolutely not. I mean, the euro it was a one-way road. When we entered, it was not a matter of entering and then leaving when and where you please. No one in Greece in the right mind objects to being in the euro. What they object to is our government basically making mindless policies. We don't expect sympathy from the Europeans. We don't expect sympathy from the taxpayers in Europe that are giving us money.
Okay.
And we don't accept... Okay.
Sorry to interrupt. Foivos Simonidis, I think we'll have to leave it there. I know you work in the tourism industry, which has also, of course, been affected in Greece at the moment. But thanks very much for your time. I mean, just one voice there from Athens. Jamie, a huge amount of frustration, obviously evident on the streets. No matter what the government says that it has agreed now, will they be able to take people with them?
Well, I think until they can find some sort of growth within the economy? I think not. I think people will find it very difficult to take the kind of austerity which has been imposed upon it. And it's quite interesting what was being said there about when they were saying, well, we can understand perhaps increasing taxes and perhaps reducing public expenditure, but why reduce the private sector minimum wage? Why do that? Well, what the government is saying is that by reducing the minimum wage, you may bring down wages in Greece and make Greece more competitive and therefore allow more businesses to come in, more investment in Greece, and consequently allow it to grow a bit. Also, the same they're talking about is more labour reform, which will take time, but they hope that by opening up many of the industries, legal industry, the pharmaceuticals industry, other areas of which have been protected or at least have been not allowed to compete freely, by doing that they will increase competition and then allow some growth. However, these things will take time, and it is not absolutely certain, even though these have been ratified by the Parliament, whether they will actually be effectively implemented.
Exactly. And what are the immediate next steps?
Well, the next step is that, of course, we're going to go to this has got to be approved by the European Union, and so the 130 billion euro loan will come through. Also, we still have got to have it signed by the heads of the various parties in Greece, saying that they will continue to carry through these plans even after the next election, whoever wins the next election. That has not been done yet, and it'll be very interesting to see whether they do actually sign that and say, yes, we will continue these austerity plans, whatever the political scenario.
Exactly, even if there are elections, of course. Jamie, thanks very much indeed.
From CNN Hong Kong, I'm Anisha Tank.
And I'm Nina Dos Santos at CNN London. A warm welcome back to World Business Today. Well, Greece has set the wheels in motion for a new international bailout. The country's parliament has approved a series of cuts here, but there's been an angry reaction on the streets of Athens. At least 10 buildings were set on fire and riot police were deployed right across the capital after tens of thousands of people turned out to voice their outrage. Well, the country is already suffering its 5th straight year of recession here, and unemployment has risen to a record high, with 1 in 5 Greeks now out of work. 150,000 public workers are likely to lose their jobs as part of these new cuts and measures, and the minimum wage will fall by 22% to just 560 euros a month. That's about $740 per month. Well, Greece may have avoided a disorderly default, but public disorder is just one of many byproducts of a result of these austerity measures in the country's new reality. Let's see what's going on in the European stock markets. 90 minutes into today's trading session, as you can see, they're enjoying quite a bit of optimism as a result of the kind of measures that were passed in Greece. Must stress, though, that this is just one hurdle that the Greeks have yet to clear. We also need to see whether the Eurozone fellow countries approve of what they've put on the table here, as well as the other lenders that are part of the Troika as well. Now, Greece is certainly the most important word on the minds of investors as we start this trading week. Michael Hewson from CMC Markets joins us now live to discuss the week ahead for these markets, and we'll start out with the topic of Greece. Michael,
good morning, Nina.
Good morning to you. How convinced are you about what's been put on the table here, the fact that this vote has gone through, but it still could face many more obstacles?
Well, I think the vote is besides the point. I think it's still got to be approved, as you said, by the Eurogroup finance ministers on Wednesday. But more than that, and I was intrigued by what Samaras said, given what Jean-Claude Juncker said on Friday, that he wanted sign-up to the austerity measures, irrespective of what the outcome of an election would be in April. Samaras said that he would look to renegotiate the terms of the bailout in April in the event of a new government. So that's completely at odds with what Juncker said last week.
Do you think that that'll cause the Eurogroup to reject this yet again? That would just be one humiliation too far, one would think, for the Greeks, especially given the anger on the streets of Athens this weekend.
I don't think anyone wants to be blamed for letting Greece go. So given the firmer line that we've seen from European politicians recently, I think there's a perception that they could be trying to force Greece's hand a bit in terms of pushing them out of the euro. What Greece have done now is they've thrown the ball back into Eurogroup's court. So I think they'll probably ratify the measures and probably release the funds on a piecemeal basis from an escrow account or something like that.
Which is very similar to what they've done in the past. And then again, that could mean just more reinforcement of austerity going forward for the Greeks, because the economy there just isn't growing.
Well, absolutely. I mean, you've seen the economic data that we've seen out of Greece over the past week. A 15% year-on-year contraction in manufacturing, 11.3% in industrial production, and obviously a contraction in growth and rising unemployment. I think what we've seen over the weekend is just a taster of what could come going forward if we continue down this path. Everyone knows that Greece really does need to default on its debts, and there needs to be a much more two-handed approach. Austerity alone will not solve this problem.
What does this mean for the markets? Because the equity markets have been actually rather robust of late in this first couple of months of the year. Is this another false dawn, would you say, given the kind of risks that lie ahead for the Eurozone and Greece?
I think so. I mean, you know, we've seen a lot more liquidity flowing into the markets over the past 5 to 6 weeks. The LTROs from the ECB, the Bank of England pumping more money into the UK economy, and there's talk that the Federal Reserve stands ready to act to pump money into the US economy. So that will underpin stock markets. But I think if the markets are thinking that a Greek default can be contained, I think they could well be in for a rude awakening, because you need a mechanism in place to prevent a contagion to Portugal, and they could be the next domino to fall if this Greece is not resolved very, very quickly.
Is there a sense here that we're facing something akin to a Lehman Brothers moment here, Michael, where people are just going to get fed up? Perhaps there won't be enough political will and momentum to keep Greece within the Eurozone and just let the country drop out. What would be the ramifications of that, and do you think that it's likely to happen?
I think it's very likely to happen. I think Greece needs to leave the euro. You've seen the euro rise today on the back of this austerity deal at the weekend. The last thing Greece wants is a higher euro. I think if they need to regain competitiveness, they need a lower exchange rate. And obviously part of that would be leaving the eurozone. Now, you really don't know what the effects of that would be, the contagion within the banking sector. You've only got to look at the French banks and their exposure to Greek debt. The French government would have to bail out those banks. Its contingent liabilities would go up. It could lose its remaining AAA rating with Fitch and Moody's. The EFSF could then lose its AAA rating as well. And then you start looking at Portugal. The list goes on. I could go on.
OK, Michael Houston, I'm afraid we're going to have to leave it there. Even if you could go on, we could debate this topic ad infinitum, but always great to have you on Wild Business today.
Absolutely. Thank you, Nina.
Have a good day there.